Everyone, welcome back to the winning characteristics video with Ray from TraderLion. And today we'll be covering GRWG, both in terms of its technical chart as well as its fundamental story. And in 2020, it was one of the greatest performing stocks. And in this video, we'll be going through its entire uptrend, talking about all the different winning characteristics that it showed, as well as how you could basically develop a routine so you could potentially position in this type of name. And before we go any further, I do want to mention that we are running a promo on the Leadership Blueprints course from TraderLion that goes into all the different characteristics that we'll talk about in this video, really in depth with more examples. And if you'd like to check that out, go ahead and click the link down below in the description, and you should get 25% off. And this weekend, actually, we'll be hosting a live webinar where you can ask us questions related to that course. So go ahead and check that out if you would like to. And with that, Ray, I'll hand it over to you, and let's get started and talk through the chart and story of GRWG.
So in this particular video, what we've been doing is analyzing stocks or former winners in the stock market, gathering the characteristics that they exhibited prior to their run-ups in price, and sort of analyzing them bar by bar from the left side all the way down to the run up on the right side, and then how the run ended. So this particular stock, the conversation me and Richard had before we started recording was, there are a few things that folks can basically learn from this sort of run up in price, and how these type of stocks can be in your ecosystem fairly early in their run ups, or before they double, or even after they double, they make your universe. And then how do you potentially position in such stocks after the fact? So one of the first things that we discussed was GRWG back in this area had a offering of $5.60. That was a pricing. And one of the things that I wanted to discuss with that pricing was the fact that the stock never tested the offering price.
Right.
Every time, doesn't matter the ticker we're talking about in the markets, if a stock does a offering and that particular price is never tested, that shows you, or that tells me that there's demand for that particular stock. Oftentimes what I see in the markets is a offerings announced, a stock acts poorly, and the price, basically comes right back into the offering price. So every time you see a stock that announces a offering, and then is acting well after the fact and never really tested that offering price, that's a huge positive. Now, it's very rare that any of the traders, or unless you really know the story, would pick up the stock at this point. Me, with the system that I have in place, wouldn't really pay. I don't go out looking for which stocks made offerings and which ones are holding. That's
Right.
just something I don't do. I wait for the volume to come in, and really I need a very liquid stock that I could potentially position in. But this concept is valid for even higher price names, higher liquid names that trade higher dollar volumes later on in their runs. Every time you see a particular stock announce an offering and doesn't come back to sort of test that offering, that shows you that there's real demand for that name, even after they offer new shares to the market. So that was one of the first points. The second one was, for me and my system and how I look at the markets, this bar would really be that first bar. This bar would really be that first bar where GRWG would make it to my so-called universe, right? And what's special about this particular bar and this particular volume is a characteristic that I look for in the markets, which is the highest volume. So this particular day was the highest volume ever, right?
Mm-hmm.
And it just so happened to be that they announced earnings. So we call that was with a earnings catalyst. Now, every time a stock exhibits this particular characteristic, and especially given the fact that we had a high daily closing range on this particular day as well, means one, it tells me there's new demand on that particular name, right? The second thing that it's telling me is, overall, you could say that the street was caught off guard, right? Given that They announce earnings with an increase of 100% growth, EPS growth, and then 123%. We're talking quarter over quarter sales, right? So the street was caught off guard. We see new demand coming in with the highest volume ever, and then it's with a earnings catalyst. All those things plus a high closing range are a recipe that, now this name should be in your universe.
And for
So,
people who don't know, Ray, what is a closing range and what does a high closing range signify?
so a high closing range signifies basically when you have a particular bar, right? You can have different bars. You could have something like this that opened over here, closes up in its overall range, right?
Mm-hmm.
You could have something that opens down here, but also closes down here. That tells you that sellers came in later on in the session,
Mm-hmm.
right? So every time we get a high closing range or a bar that closes, it's a full bar where it opened at this price and it closed. It really gave back very little from the top. That tells you that the buyers are in control, right? That's exactly what you want to see on these particular days. Often you'll see candles if it's sort of like a one-off type of thing, right? With many of the biotechs tend to do this is they will get the highest volume ever, right?
Mm-hmm.
And they will have some sort of news catalyst, but the bar might be where they open at say $10, they go to $20, right? They double in price, but then the close might be somewhere right around that $12 mark, right? So that sort of closing range, when they fade all of that from the $20 mark down to the 12, that shows you that sellers are coming in off the top. But the fact that on GRWG, we saw that full bar and it held its, shape into the close, shows you that institutions are sort of stepping in, and there's a firm bid behind that particular name after it reported a good, earnings, sales, the volume was there, the catalyst is there, and it's good volume where it took it from about the $10 mark right up into the 12, 13, 14s. So,
And it that didn't just happen on the earnings day. It also had nice follow through the next, looks like 4 days pretty much. Most of those days had large volume with pretty good closing ranges. So there's a lot of signs of demand there.
right. So always step one is the stock must make your universe. Once it's in your universe, now you start getting into the entry tactics, right? How do I profit from this name, right? It has the characteristics that I look for in past winners have exhibited this characteristic. And then you start to learn a little bit more about the story, right? When I started looking at this particular name in this area, it was part of that cannabis theme that was doing really well in the markets. So that's a big positive. Now you have a name that's part of a theme. You have the winning characteristics behind it. You have, most importantly, the volume, which is a huge, there's demand for this name. It makes it to your universe. And now it's up to you to sort of enter that name. At times, I know traders that could really pick it up. They look at earnings the night prior and they could really pick it up at this spot. They can anticipate this sort of movement. They see the quarter over quarter sales and EPS, right? And they would sort of take this entry on open and sort of place their stop at the prior high to see what sort of volume comes in or how the street reacts to it. That's one way to go about it. That's very early in this particular run, right? Now, the other way is if you catch it on the close of this day, it starts catching your eye. What do you do then? So that's where your entry tactics come in. Now, there are a few ways to approach this. You could take the high of this day or the close of that particular day, right, and use that as your guide, because now you have a high volume, sort of, you could say, some sort of anchor on this particular name. If it closes above, it's a good thing. If it closes below, maybe it needs a little bit more time, right? This particular day, when it takes out the high or the close of that day, that's your first really, very advanced entry area, right? And this is something that you guys should strive for. When you're studying winners, you want to get in as early as you can, because when you see this characteristic, and you've studied it, you've gone back and you've seen winners do this over and over and over and over again, right? You could develop entry tactics that could be earlier. It doesn't have to consolidate and do a whole basing thing where, the goal should always be to be in these winners as early as possible while managing your risk, right? You don't want to be, oh, I see volume, there's no way for me to manage risk, I'm still going to go buy it, see what happens, and you end up with a 15% loss, right? Confidence always comes from studying these sort of, these characteristics, going back, having examples, 50, 75, 100 examples on a per cycle basis, where you have some sort of precedent. And then when you start trading off of precedents, your confidence is sort of there to put size on these sort of names, right? So that's your first entry. Let's mark that 1 through that particular high. If the stock comes sort of, it opens, takes out, comes back in, rolls over, but then closes back above, you might need a few times you attempt that sort of entry. That's just how it goes when you don't have consolidation behind it yet, right? And that comes with experience. You'll get whipped out sometimes it'll work right away. In this instance, you end up with a pretty good gain where just the stock just doubles, right? Or sorry, it goes from about the $13 or $12 mark to the $22 mark. You get a good run out of it right away. And then the most important thing is increasing price action with increasing volume, right? And then depending on your sell rules, right? Maybe you scale some into strength. If you're in the market to perform, you should be scaling it, scaling out if you oversized at this spot, or depending on your entry tactics, whatever the case might be, your sell rules will get you out before it sort of bases for a very long time.
And just to add, on that top day, I mean, it got very extended from the 10-day even moving average. So it was like 75% from the 10-day. So your scale rules should be coming into effect there to make sure you're not giving back too much off the top.
Yeah, for sure. I mean, so it all comes down to once you have an entry, that's your buy rules, right? If you study the past stocks that have exhibited this sort of action, you know that this sort of extension, right, into these sort of days, especially away from that 10-day line, you want to be scaling into strength. You don't want to sell when you have to. You want to sell when you want to, right? So all of that comes in. Nobody can sort of tell you that. You have to sort of see that, the fact that it's sort of gone from this $10 mark to the 22, it's going to rest at some point. There's no such thing as it just keeps going to 50, right? So that's your initial entry area. If you didn't catch that, the other thing that I wanted to discuss was what could, how do you determine potential for these sort of names, right? How do you, given the fact that the market cap on this particular name, and this is really the first time it did that on an earnings catalyst, this is really the first cycle for this name to be a winner in the market. So if it's a winning stock, what it's going to do is it's going to come back in and is going to tightly consolidate as institutions become aware of it. So some of the numbers that we crunched before this video was back in June 20, back in this area, right? There were 94 funds in this name at this point. And then right into its run up, right into this March area, the number of funds increased to 261. So there's a gradual increase as more institutions become aware and start accumulating stock, right? One of the first signs is price action is going to get tight, and it always does. Now, one of the recent examples of that, if you go and look at UPST, right, it was trading wild, and now it's really tightened up, right, where the ranges have sort of really gone down to that 3 to 4% range a day, and it's not acting as wild as it did with the 20% up and 10% down and things of that. So when institutions want to get into a particular name, so this is institutions getting into a particular name, price action really tightens up, and they sort of control that, right? They're saying we want stock and we want to control this particular stock. And that's really, that basing period develops potential for this, this name is building up that energy so that when it runs up, now not all that, institutions position from, contraction comes expansion, and you get that expansion from this particular name. So how do you determine potential? It's a fairly, low market cap, newer name in the market. The streets caught off guard. It doubles in about 1, 2, 3, 4, 5 days. Now you have to keep this. So one, you have to keep this in your universe, right? You have to keep tracking this name, even though it went from 22 to 13, which is about a 43% base depth from this particular high to this particular low, right? You keep this in your universe, you start tracking it, it starts getting tight, volume sort of goes away. And now you can find a logical spot, because this is really the first cycle. It's won or been a winner in the market. Now it's up to us to find that second one, because given this sort of volume where it got up to 45 million, right? The chances are, if the market stays in an uptrend, that this sucker is going to double again, which it did, right? So keeping that in mind, you determine potential from, is it a young name? Is it the first cycle for this name to really win in the markets? And once we get that, and we have the numbers to back it up with triple digits, right? Triple digits EPS and sales, that really tells you that, there's potential here. And then now institutions, this is all institutions sort of controlling the name, the action getting tighter. Rarely will you ever see a name that double again without some sort of consolidation here. So it's very important to keep it in your universe, set some sort of, top side alerts, set bottom side alerts, to continue keeping track of this name as it builds what I call basically potential for another run up. So that's
and
yeah,
one thing
go
I'll
ahead.
add, Ray, is this chart reminds me a little bit of Neo, because it had that super powerful move before the base that really started everything. So just because something has a near vertical move, wait to see whether it will form that base, and this one did, and Neo did as well. And then after that base is fully completed, institutions have accumulated those shares, supply and demand characteristics are right, then it can go on and have a nice run. And during this base, it looks like it changes character a little bit. It starts respecting the shorter term moving averages. And one thing we were looking at on the weekly chart was it never lost the 10-week moving average during this entire base. So it was showing all those classic signs of accumulation during this base. Yeah,
Right. So
there.
this was
Yeah.
the run up that Richard's talking about, and it sort of held this purple line, which is the 10-week line, right? As it consolidated, price came in, right? Sort of respected that 10-week, respected that 10-week as it consolidated below its 2288.
And all the high volume weeks within that base, if you look at their closing ranges, they're good closing ranges. Even the first one in the base, although it's a red week, it finished down. It also has a nice closing range. So there's a lot of signs of demand coming in and support, especially near the bottom of that base when it tightened up.
Yeah, so the closing range matters a lot more on the weekly, especially if you look at it. So this looks like I think it's incorrect to have this as a pink bar. This should be a blue bar, given the fact that it opened the week down, but it closed above its open. So that's net accumulation for that particular week. So
Right. And a rule of thumb is better than 40% closing range might be accumulation, but obviously greater than 50%, greater than 75%, that's even better. That's a stronger sign of demand coming into the stock.
right. So now that we've talked about this being your first spot, and you likely scale out depending on what your sell rules are, right? This is your first entry spot. Recently I've been sort of a little bit more proactive to see if I can, look at these sort of names that report it, especially ones for the first time, see after hours volume. All of that takes, that's personal development for you in trading, where When you know that you could catch a stock here, then you start thinking about, what can I do to catch it on this day? So that's improving upon yourself from, as years go on, and you sort of work your way back. You're always trying to be better than you currently are in the markets, right? So if this is advanced for you, then you wait for this consolidation, and your goal is to see if you could spot them at this point. If you're already at this phase, then you try to, get a little bit, you could say, a little bit more greedy, or refine your tactics a little bit more to see if you could buy these sort of things on open where you see big volume coming in. So always focus on getting better on, how can you tune your tactics in the market so that you could generate performance or alpha from the markets. Let's get into the second thing. Basically, is this consolidation now, right? How do you interpret price action gets tight, volume sort of dissipates? For me, that really boils down to, how is this name acting when the market is under pressure? That's sort of what I call, RS days, RS zones, whatever the case, whatever you want to call them. So the really obvious one that we see is the RS line is rising while the S&P is falling over in this area. Right. That tells you that there is some sort of support where this name is performing. So this line that I just drew, right, in this area, there is some sort of bid on down days in the market. So that's evidence that you're building. Now, you could clearly see that again in this area where, again, the S&P net is under pressure, but GRWG on a net basis builds another RS zone in this area. So that's this. It's performing while the market's under pressure, right? So names that hold up well on down days in the markets, those are your RS days, and that's a big clue, especially when you're trading within this larger, you could call it, this is 43% depth, some sort of base or consolidation area after it gets its initial run up. So those particular areas are clues that the price is being supported. And that's really what I look for. Once I see that, it keeps you interested on down days. This will make when you're reviewing at night, it's going to tell, GRWG is going to show up several days in a row, and that you really key into these sort of names. Again, market pressure when it lifts, right, and we go into new highs, we basically get a run up in price up the right side on this particular name. I like to track stocks from a whole number point of view. So I know that for a fact that in this area, I did try it and then got stopped out as it failed below 20, right? So once it fails that, price came in, sort of starts holding that 50-day plus the $1.15 mark. So if this is an RS area and this is an RS area, price is still holding above this prior, this is something that I've sort of been studying recently, is price comes back to see if it holds that prior RS zone, right? Mm-hmm. If it holds that, this is just something, you observe a characteristic like that, then you see if other names do that, and you sort of develop a feel to see that, do names do this consistently? I feel that names do exhibit such action where it held the 13s area when it came back. That was a prior, RS zone where it really outperformed the markets. Price holds the 50-day, curls right back up. Now your traditional entry areas are going to be this, right, 2133 or this 2288. But these days I've sort of, tuned my tactics to see if I could get a little bit earlier, especially given the RS in these zones. Maybe Richard, you want to share how you would approach an entry in this area?
Yeah, so this one is a little bit tough because it is very choppy near that area. And let me get my annotate tool ready. So this day right here on high volume, which with another high closing range, is an earnings report. So you don't have a lot of time to get a profit cushion, as Ray was talking about, which is why it's good to get in early. You do have the standard breakout here, but most likely you are stopped out, and maybe you can, if you're a little bit more advanced, you can try to get an entry, an undercut, and reclaim of the short-term moving averages. But nevertheless, it's tough to establish a position, I'm not going to lie, within this base right before the earnings. So really, when I was paying attention to this is after that earnings report, how's it going to act? And once again, we can use one of those tactics where you've got a high closing range. If you buy it intraday on that earnings gap up day, how do you manage risk? Maybe with an intraday setup, an intraday breakout. And then once again, we get some nice fall through, good volume right after that move. But probably I'm looking for a kind of fish hook type setup, or a setup that I learned from George Kachuk, the US investing champion of 2020, the money manager division, as it moves back through that high volume close on above average volume. So that's probably where I'm looking. And then obviously you've got a nice run, holds a 10-day as a lot of the strongest stocks do after a breakout, and then forms another potential entry for me right here as it pulls back pretty nicely against those key moving averages and tightens up, forms a range, and then pushes up on a little bit of volume here. So that's probably how I would do it. But Ray, I know you approach it from a different point of view. So how would you position in a name right here?
Right. So what we want to keep, the reason we're analyzing these is it it doesn't mean that you have to cash this or whatever the case might be. It's just if you have your processes allow you to sort of stay in this and keep this on the watch list, maybe you catch it, right?
Right.
Uh, we're not going to be perfect, but we just want to make sure that stocks that double in price are at least part of your universe. And the more of those that you have, the better you'll perform in the markets. At least, you catch maybe one or two out of every 5 or 8 or 9 or 10, right? So the two that you catch are really going to move the needle in the right direction.
Right.
In this particular name, yeah, it's fairly tough because I remember trying to get involved in this area, and then it sort of washes you out, right? And then really the other entry in this area would still be
Yeah.
way too early. That's why I sort of discussed this. I see RS zones, price comes back to this area and it sort of holds that area before it rallies up and out. So I'm always developing those tactics. Really, the way I see it, like you said, this is the second earning cycle that is reporting. This is the highest volume that it saw in this area after its initial run up. If I had this on my radar, one of the alerts that I would be setting is through that 25 mark, right?
Right.
So this recent high was 24.94. So maybe I set an alert at 24.90, right? See how price acts in that spot. And if it could take out 25, hold 25 on a closing basis, it could build me a cushion, right? Really, the first entry that I see after this, this is still whippy,
Right.
is the fact that it came from 37 to 30. That's your first test of the 21 day after it broke out to new all-time highs, right? So that's one of the setups that that first test. I think ASAN is doing that right now as we speak, where it broke out to new all-time highs. It did the first test of its 21 day. Support came in, it put in a high closing range, and then it went to new all-time highs, right? So this is very similar to that, where the stock made new all-time highs, price comes in. That's your first day of your 21 day and your 23 EMA price. And what I like about it is the fact that the price holds that $30 mark.
Yeah.
Right. Which is big for me, where I try to track stuff on a whole number basis. So when it holds that 35 here, and then it holds that 30 here, and it holds that 30 here, that 21, 23 confluence, I would put on a very big position, or, depending on my, how the market was doing at that moment, my exposure or the cash on hand, I would put on a big position in this area where I would try to get involved in the 30s, right? And then put my stop right below in 29.95s, where if I'm wrong, I get out right away. If it breaks that 21 day, I get out right away, right? If it holds that, I win. That's it. So that's one of the, this first all-time highs, first test of that 21-23, price responds really well. That's what you want to see.
Yeah, and what I want to add here is it's a nice orderly pullback to the 21 day moving average and those other short-term moving averages. It's not happening all in one bar on one day on high volume while the overall market's seeing pressure. It's nice drift kind of down on below average volume. So there's not a lot of signs of distribution. So it's a very classic pullback to a moving average buy. And then, yeah, if you're like Ray, you're accumulating near the bottom of that range, near the 30 mark, or you can buy it kind of through some of these highs or through the DTL that I drew before, and buy it on strength. So there's a couple different ways to play that type of setup.
Okay, so that I think we've covered quite a bit, and then if we keep moving on to the right side of this particular run, we see something very similar. We move to all-time highs, first test of the 21 day, we rally up and out, right?
Mm-hmm.
Now the other thing I see something very similar. We rallied a new all-time highs and we come in, and that's your first day of your 50-day test, right?
Mm-hmm.
Maybe you tried some stock in this area. Um, Maybe you tried some stock in this area, but the way it came back down to this particular day, it looks like it pierced below it and closed below that 21 day and 23 EMA, right? So for me, if I'm positioned from this area, I would likely sell stock uh, into highs if I have an oversized position, right? If I have a normal size position, this would be my first cut, uh, at least a third or a half, and then I would start watching that 50 day. So in this case, it came from 53 down to 40 and held and respected 40. That again is very similar to how it came down and held and respected 30 for me. So from a whole number point of view, and how I try to keep track of it, um, basically, I mean, there's no magic behind it. It's just that when you start when you're some in the markets get, so the money that you manage gets a little bit larger, you don't have time to play around with decimals. So I try to keep track of stocks on, is it above 30, below 30? Is it above 40, below 40? If it's above 40, it's still doing pretty good. I'm going to keep track of it. Is it above or below the 50 day, right? This is your first 50-day test. It's not even proper. It's right above that 50. It respects 40 and then takes off the new all-time highs, right? So this would really be a second spot. If you were positioned in this area, you sold some stock here, maybe you add back in this, and then you get a new run to all-time highs. So
Right. And one thing I'll add again, and if Ray, if you could, erase that for just a second. Yeah, once again, this pullback is pretty orderly. It's on below average volume. First touch of the 50-day, 10-week after the breakout looks pretty good. And one thing I want to add about this setup here is within this, after it pulls back to the short-term moving averages, it has an inside day, the bar prior to the one I pointed out, and then it looks like it has a nice bullish outside day, where we had a gap down on the overall market and then a fast move up through that low and a finish above the prior day's high. So there was a tight range with that inside day, and then it broke it to the downside, and then there was a lot of demand that came in and just pushed up through that high and broke out. So that was kind of the start of the move up from that 30 level. So that could definitely be an entry with pretty minimal risk, because you can just set your stop at the low of the day. If it works, great. If it doesn't, you're stopped out for a very small loss. You're managing your risk correctly. So that definitely could be a potential setup right there.
right. So I guess the next thing that we would discuss, so what do we, just to quickly recap, this would be your really, your first entry area. The goal is really to, my goal recently has been to study these the night before to see if it's going to be a young stock that, reports triple digit earnings. Could it have potential, or could I potentially enter on this first day rather than waiting for that second day? So that's your first entry area through that high or close. Stock basically goes from $10 to $22, needs rest. Institutions come in, they step in, price consolidates. It builds two RS zones where you see basically a bid on the name on weekdays in the market, right? That tells you that there is potential positioning and is building potential for this right side move where it doubled. Now the market was really cooperative. We said that, this area, it was still pretty whippy. And then this first pullback was on low relative volume, right? To the first 21 day, you go to all-time highs. And then this particular pullback is also on fairly low volume in this area where you get a very close test, not even a test of the 50-day, but it holds the 40s to new all-time highs. After that, things get a little bit wild, given that we were starting to enter that zone where it was basically the growth correction, right?
Right.
So so in this area, I believe it was Feb 2022 where things got really, really wild across the board. And stocks had about 22 to 30% ranges, depending on the stock that you were holding, right? That would be any of the growth stocks across the market sort of opened down in a big way, and the character changed completely in the markets. Once you see that, it's really important. Again, one of the things that I discuss at the under the private access hat is it about being right versus performance.
Mm-hmm.
So being right means that you're up on a name, right? So if you're up, you put on a position and you're green, right? You're positive. That means you're right? You made a bet in the markets and you did well, and the stock is up from your opening price, or the price that you bought at. Performing is a whole other art. It's not about how long can I hold on to this, and I just want to be right in the markets because I bought this particular stock at, say, this area, and I want to hold it as long as possible. That's a performance mindset would scale this into strength and really get out when things get weird, right? Be a mindset that's focused on being right is only concerned with there's a lot of ego at play in this uh, area, right? You just want to be right. Eventually, you'll be right if you hold on, even through, it goes to 33, it goes from 50 to 33 to 55. If you want to be right, you'll hold through all of that. But a performance mindset is really, when things are not going your way, you recognize that. The goal is just to see a rising equity curve, right? You just want to see a rising equity curve. You want to see a return from the markets for you. So these two are very different things when it comes to. So you either want to be a performer or you want to be right. I'd rather be a performer. So when things get weird, you get out, you reassess with a clear mind. You wait for this tight action to show again over here, and then you could logically, uh, place your, risk reward is optimal. You could size up a name again, and then maybe it works for you.
And is performing also about leveraging time as well? Not just leveraging your capital. It's about leveraging time and making the performance quickly in steps, and then going flat when things kind of get weird. Is that right?
Yeah. So when momentum changes, right? So it depends on the type of trader that you are. If you're a position trader or a swing trader or an investor, maybe an investor starts adding in this spot, whereas
Right.
a person that's focused on performance, the tide has completely changed. It went from 67 to 44. It the tides changed. There's nothing in terms of logical areas that you could be, when a stock's moving from 52 to 44, that range is too wide for you to really, step on the gas and really, have size on, because you'll get kicked out pretty good if you catch one of these with size on. You'll whatever money you made from this spot and this spot is all gone down the drain at that
Right.
point. So performing is about, you when the environment's optimal, you recognize when the environment's changed, and you step back and you say, this is done, on to the next one, right? Being right is sort of holding through the whole base, going through a whole bunch of emotions, and then maybe, just maybe, you're right at that point after maybe 6 to 8 months of holding this from 67 to 33. That's a whole different ballgame. But a performing mindset, you want a return from the markets right away. You're only concerned with minimizing these drawdowns on your equity curve and seeing a rising equity curve, because that's really when trading in the markets is a source of income, like it's your income that you depend on. You have a performing, you're focused on performance at that point. You're not focused on GRWG is a fantastic company and all that stuff. So
Yeah, because as we've mentioned a couple times, like the story can stay the same throughout a run and then a 50, 60% pullback. We've seen that time and time again.
Yeah, for sure. I mean, if we just zoom out at this, this particular day, if you guys remember, again, we've talked about this in several videos, was Feb 22, Feb 23, things completely changed. Ranges got really wide and the stock sort of gone dormant now into like it's hibernating
Yeah.
for a new potential base. And at this point, it just needs time, right? What I would like to point out, and this is something that we discuss in the leadership blueprint stuff, is the fact that when stocks want to change trend, we will eventually see, sort of the KMA start bunching up when it wants to run up in price, right? It attempted a potential run and then it got sort of kicked out, and then we see distribution in the stock again. Now it will eventually form a base where it tightens up, volume on pullbacks gets lower and is not increasing. So in this area, volume's increasing on the pullbacks. You'll eventually get a rally up the right side where the pullback is going to be on decreasing volume bars. So the volume bars are going to get narrow. That will tell you that sellers are drying up, right? And this could be on any stock. It doesn't have to be GRWG. So you'll get a right side run up, which we've been seeing recently in growth, where we'll basically get big volume bars. We'll get a pullback on decreasing volume. That tells you sellers are drying up, and then you'll get another right side run up where it really starts running, and you'll get big volume coming in again. So as of now, if we just look at it, so this was really that area where there's a big red flag in growth. We went into a larger base pattern, and this happens to be one of the names that still hasn't recovered, because many of the names, if you look at the SQs or the SEs or Roku recently, they're all right near all-time highs again, right? Whereas something like a GRWG just never made it back as of now.
Yeah, and the fundamental story hasn't really changed. We've got estimates for this year, 373%, estimate revisions up, good estimates for 2022 as well. But still, the stock isn't setting up on the chart good enough for basically us to be interested, because we want to be concentrated in the highest quality leadership quality stocks with the greatest earnings, sales, margins. But most importantly, the chart has to be right. It has to be orderly, has to be tight, and there has to be spots for us to logically get in and signs of really strong accumulation by institutions. And going back to the weekly chart, Ray, if you go to that for just a second, we were talking about earlier before we pressed record that it basically held that 10-week line right until that very volatile day where the character changed. So just going to going over to a weekly chart and looking at that 10-week line is a great reference point for when you should be holding a stock of this caliber.
Yeah, just a last point on this particular video. The emphasis should always be on your processes, allowing you to sort of have this on radar, right?
Right.
It doesn't guarantee you're going to catch this. It doesn't guarantee anything. The first step, like the overall, the first step is process, having this in your universe. Once you have it in your universe, then you focus on entry tactics, right? How do you enter a name? Where do you place stops? How do you, generate as much alpha as you can out of this? Once you have that, then within entry tactics, you have buy rules and your sell rules that get you out, right? So that this should be a sell rule. When ranges widen across the market and something's clearly changed, you get out, or at least scale some so that you don't give back 67 to 33 and sell over here and then go through a whole emotional cycle where you see it rally back up to 60. Right. So process, how, these characteristics will put this in your universe. Then you got to focus on entry tactics. Maybe this is your entry tactic. Maybe you're in a phase where now, you're ready to enter on day one instead of waiting for day two. These two things are really the point of this series, is to analyze what these guys, these tickers are doing. How do you make them part of your universe consistently, and then focus on entry tactics to position in them that first pullback, 21-day, second pullback to the 50-day, and then see how you could basically generate alpha or an income from this sort of overall process.
Perfect. Ray, did you want to summarize the different winning characteristics that we talked about in the video?
Yeah, so highest volume ever plus earnings catalyst. That's your first one, right? Clear as day on this. The second one, you could talk about the RS zones in this area and this area. So you want to keep track of those. A good stock will outperform the markets on the down days so that it could drift up and double when the market's cooperative. The third is determining a potential for a stock. If this is the first cycle that it's winning, is very likely that it's gonna try to attempt to double or at least move up the right side once again. So I think that's important. So determining potential is also important to sort of keep that in context. If this is the first quarter, it's reported triple digits. If the market's cooperative and then it shows those RS zones, it sort of doubles again. So really, this one is a fairly straightforward one. If you keep track of this, which we keep track of, we call that the TL Gappers watch list, right? This is going to be in your universe, and then that allows you to enter this particular name.
Perfect. And I'll add just a few more. We see a clear step up in average volume throughout this move. That's definitely an indication of more institutional involvement in the stock. We also see respect for those shorter term moving averages, especially once it's trending. And then just within that base that we talked about, it's more clear on the weekly chart, but we also see a lot of pocket pivot volume signatures within that base as well. But if you just go over the weekly chart as well, just look at the closing ranges, look at the relative volume of those weeks, and you can clearly see that the up weeks, there's more demand for the stock. So that's for sure. So yeah, that's all I think I would add.
Yeah, we could wrap it up there.
Perfect. So go ahead. If you enjoy this series, this video, definitely go ahead if you're interested and check out the Leadership Blueprints course if you haven't yet. If you enjoy this series, we really go in depth into the winning characteristics with articles, blog posts, videos explaining key concepts, and also quizzes to reinforce those key winning characteristics. So if you're interested, go ahead and check out the link down below. And if you enjoyed the video, go ahead and leave a like down below and subscribe if you're new to the channel. I'll see you guys in future videos. Thanks.